Have you wondered if your credit score is important when you're ready to buy a home? That's what I'll be talking about today, so stick around. Thanks so much for joining me today. I'm April Edwards, a real estate advisor in Magnolia, Texas. When working with buyers, inevitably their credit history and credit scores come up in our conversations, so I thought it would be a valuable topic to discuss with you too. Let's start first with some basics on credit scores. There are several credit score calculators, but the most commonly used version is the FICO score, and that's what I will talk about in this video. Your FICO score can range anywhere from 300 to 850. The percentage breakdown of scores according to Experian is on the screen, and the latest information I could find said the average American's FICO score is 695, near the middle of the good category. There are several factors which make up your score, and I find a lot of people don't realize that or know what they are. So what are the factors? 35% of your score is made up from your payment history. Lenders want to know if you pay your bills on time. Late payments, collection issues, and bankruptcies affect this part of your score, and more recent ones hurt your score more than those in the past. Another 35% of your score is made up of your debt level. The amount of debt you have in comparison to your total credit limit is referred to as your credit utilization percentage. So if you have credit limits of $1,000 and your current balances total $300, you're using 30% of your credit, or you have a 30% credit utilization score. 30% is a good threshold to stay under. A higher percentage will result in a lower credit score. Another 15% of your score is made up from the length of your credit history. The longer you have accounts open, the more information can be gathered about your spending and payment habits. Some people think it's good to cancel cards they aren't using, but in actuality, it usually helps your score to leave them open. But this only holds true if you aren't going to charge on them when you shouldn't. 10% of your score is comprised of your mix of credit. This one doesn't make a lot of difference, but every little bit can help raise or lower your score. This shows lenders you have experience handling different types of credit. For example, having a mortgage, a car loan, and a department store credit card demonstrates you can handle different types of payments and terms. But don't open a new account just for that reason, and here's why. 10% of your score is based on the number of credit inquiries you have within a certain period of time. Every time someone does a credit check on you, it shows up as an inquiry and can affect your score for about the next year. One or two don't usually hurt your score, but if a lender sees a bunch in a short period of time, that can cause them concern, and it usually lowers your score. Now, since this channel primarily focuses on real estate issues, I want you to understand it's important to shop around for the best deals when buying or refinancing a home. Because of this, the FICO scoring model uses a 45-day window for situations like this, treating multiple inquiries as one according to the website thesimpledollar.com. This also applies to auto loans and student loans, but not categories like credit cards. So don't be afraid to talk to several lenders to get the best deal for you. So why do you even care about your credit score when it comes to buying a home? Well, the biggest reason is lenders are going to use it as a quick determination as to if you can qualify for any loan at any amount. Then they will use it to help narrow down what kind of loans are available to you. Certain loan programs have different credit score thresholds you must be above. These two reasons are fairly well known. But the one most people are not aware of is that your credit score impacts what interest rate you will be offered by a particular lender. So if you have a higher score than another buyer and want to buy the same priced home, you'll end up paying less for that home because of your higher score. To help put that in perspective, if your credit score enables you to receive just a 0.25% lower interest rate on a $300,000 loan, that's approximately $42 a month difference in your payment. This is why I suggest you start working with a lender as much as a year before you're ready to buy, in case you have any credit issues you need to work on. Hopefully, this information taught you more about how your credit score is calculated and what impact your score can have on buying a home. If you have any questions I didn't answer, ask them below in the comment section and I'll get back to you with an answer. If you found this video helpful, please click the like button below, and if you'd like to see more videos like this, click the subscribe button and the bell to be notified when new videos are posted. I look forward to helping you with your real estate needs in Magnolia, Texas.